Now can I call on Sean Hughes? Sean has a very big job. He is the Chief Executive of the Financial Markets Authority. Of course, they took over the role of the Securities Commission, but of course the role is much bigger. It's more than double in size of the previous role of the Securities Commission, and on top of that, the budget is also substantially bigger. There's a major review going on of securities law, and of course there's quite a big job to do in the aftermath of the global financial crisis. So Sean, we are looking forward to understanding how you tackle your job. You can't do everything, but the important thing is that you've got to try and maximise your ability as a regulator to be carrying out all of the functions that you now have. Thank you.
Thank you, Mai, and congratulations on this significant piece of work and contribution to thought leadership in New Zealand. And I'm honoured to be here today to contribute to this discussion. I'm here to talk about how and when FMA can help citizens, and I think it's particularly momentous to be standing in this place on this particular day, because today FMA is 1 year old. And so I've taken time out from our board meeting and our very, very modest and inconsequential from a expenditure point of view celebrations to commit some time to this, what I see as quite vital conversation. It is an important question as to what we can do to help citizens, and it's one that we've given a lot of thought to already in the first 12 months of operation. There are, of course, some immediately obvious answers. Firstly, FMA's overall goal is to build a more competitive and productive economy, and being successful in that goal will have a direct effect on the financial health of New Zealand and New Zealanders. Financial health is closely linked to being able to realise our personal goals and ambitions, whatever they are, be they home ownership, education, travel, time with our family. These goals are all very personal. But it's worth noting that I've said financial health and not wealth. These goals are not about extreme wealth or lots of money. They're rather about managing whatever it is that you have in your own circumstances. And for New Zealanders, financial health is about making good decisions across different life stages. Some planning, some caution, and where appropriate, some risk-taking. And that brings me to my next point. FMA has a role to play in assisting to build New Zealand's economy, in building the integrity of financial markets and restoring the confidence to those markets which was shattered in the last decade. But I want to be clear that our role is not to remove risk from the market, nor do we have any statutory mandate to protect consumers. Now that may sound initially surprising, and for some of you perhaps confronting or controversial. And it might go against expectations that removing risk and protecting investors are examples of how we at FMA should be helping citizens. But in reality, I think the notion of protection in our space is rather patriarchal. And dare I say, it's patronising. It's a patronising view of the investor as a victim, as powerless, and as without influence. And that's not how I see them, nor do my board. There's nothing more powerful, in my view, than an informed investor base making smart decisions about where to put their money. It drives a competitive market, good investor returns, and importantly, product innovation. So I'm here today to make the case that investors, in fact, have the responsibility to be informed. They have the responsibility to seek sound advice and to ask questions and to make considered and appropriate and life stage appropriate decisions for themselves, not to operate in some sort of nanny state where every decision is made on your behalf. And the suggestion of some sort of risk-free market flies, I think, in the face of market realities. Risk is a healthy component of a thriving commercial market, and decisions around risk appetite are an important part of any tailored plan for any investor. The key is that investors need to understand the risk-reward equation, which simply means that the higher the risk, the higher the return, but equally the higher the risk of no return. So if we view investors as informed, active market participants who are seeking to build their financial health and realise those personal goals that we've talked about, rather than as passive victims or spectators, and if we don't view them as needing protection, then rather we're looking to provide investors with a strong, healthy market to participate in and a market with good governance and sound integrity. I think even the most informed investor needs a level playing field in the form of the following: accurate, readable and digestible clear information, good disclosure and sound advice from a professional who is licensed, skilled and fit for purpose, and transparency around how that advisor is paid and remunerated, and last but not least, a good range of products in the marketplace that are suitable for that investor and that they understand. I could best summarise that as having multiple investment opportunities that are clearly signposted, operating within a healthy, robust and well-regulated market where practitioners act with integrity and honesty. And I say to you today that my role as head of the FMA is to do our part in building that level playing field and working with the market and our co-regulators to bring about the change that New Zealand so desperately needs. And in the interest of time, I won't run through all the things that we've done in our first 12 months, but let me give you a few examples. Firstly, we've implemented a new regime around advisor licensing and monitoring. We've raised the bar on professionalism and behaviour to ensure that advisors have adequate knowledge of the products that they recommend and are fit for purpose. And we're currently undergoing a range of regional and metropolitan visits to ensure that advisors understand their obligations and are meeting the needs of their clients. Secondly, we've issued guidance on effective disclosure. As Mai mentioned, there's a significant piece of reform before this House in terms of the Securities Law Review and the Financial Markets Conduct Bill, which has recently been referred to the Commerce Select Committee. In reality, those reforms in terms of full implementation are still 1 to 2 years away. And the market in the meantime needs guidance and it needs clarity from us. So we've responded to that with an extensive consultation process and the issuing of guidance on disclosure, recognising that one way to level the playing field is by making sure that investors have concise, accurate and relevant information. Thirdly, again in our short history, we've already taken prompt action where we see poor disclosure or bad behaviour. On our very first day of operation, we utilised new powers which we'd just acquired to stop undesirable marketing practices and unsolicited share offers by the appropriately named Mr. Wimp. And we've also issued stop orders to NZF Money, Asset Finance and Geneva Finance, and we've warned consumers against sending money to Mako Securities. We've continued the prosecutions of and secured convictions against directors and others associated with Nathan's Finance, National Finance, Lombard Finance and Bridgecorp Finance. And there are more to come. And thirdly, as to investor literacy, if we agree that the investor has a responsibility to be more informed, we also need to acknowledge the requirement for more initiatives, programs and channels to make that possible. And we, alongside the Commissioner for Financial Literacy and Retirement Income, have a role to play in this space. It is, to be fair, quite a crowded space in the public sector. And I think the focus needs to be on programs that work, that engage, and that effect genuine behavioural change given the pool of funds available for investor education. And finally, in a novel space, we've established a strategic intelligence unit which is responsible for identifying threats ahead of time, anticipating market changes, and keeping pace with innovation and changing products, so that in future we are ahead of the game, not standing at the bottom of the cliff waiting for the cars to crash over. So the changes I've talked about this afternoon, ladies and gentlemen, are designed to bring about a more mature market, offering up solid investment opportunities for more informed and confident investors. This won't happen overnight. It didn't happen in our first 12 months, and dare I say, it's likely to endure past my first term as CEO. It will take time, tenacity and commitment. And importantly, it requires a change in market behaviour, a new level of maturity and understanding about the value of market regulation, but importantly, above all, a willingness from investors and consumers to make sure that they know the road rules before they get behind the wheel of the car. Ladies and gentlemen, thank you very much.